Bismillahirrahmanirrahim. Today we will discuss about incomplete records, which is also known as single entry system. And this single entry system, today we will discuss how to maintain records. In this chapter, as per the learning objectives, we should know what is capital at the start and how we can calculate, what is capital at end and how we can calculate, what is a statement of profit and loss and why we prepare this statement, and what is a statement of affairs and why we prepare this statement. As per the starting and ending statement, in the absence of real account in the books, it is not possible to prepare the balance sheet of the firm. Therefore, starting and ending statement is prepared. The starting capital can be calculated as starting assets minus starting liabilities, and ending capital can be calculated ending assets minus ending liabilities. When we start preparing records, we should know what is capital at start. Startup capital refers to the money that is required to start a new business, whether for office space, whether for license, either for purchasing inventory, product development and the manufacturing, or marketing and any other expenses. There are many users or there are many authors thinks the startup capital is also known or is also refers to as a seed money, which helps to start a business or establish a business. To find and to calculate the capital at the start, we use two different methods. As per the first method, we will use total value of an assets less total value of liabilities, and the remaining balance is known as capital at start. As per the second method for calculating capital at start, we use a T account to finding the balance, in which on the debit side we record total assets and on the credit side we record total liabilities. As we know, in preparing T accounts, the debit side and the credit side should be balanced. So we find the total of the both sides. When we find the difference, then should be recorded on the credit side. As we know, the capital always, whenever the capital increase, it's always recorded in the credit side. So we can call it the difference between total assets and the total liabilities. With the help of T account, we can find that the balance known as capital at start. As per the definition of capital at end, we know the ending capital account represents the net assets of the company, and the ending capital account equal the beginning balance minus any drawing plus additional contribution plus any net income or minus loss from the period. To finding the capital at end, we also use the same two methods for finding capital at end. As per the first method, we are using same method like a total value of an assets minus or less total value of an liabilities, and the balance is known as capital at end. For the computing and calculating the capital at end, the same method that we can use to find out the capital at the start with the help of T account, and the same method we can use to find the capital at end with the help of T account. Again, the debit side records the total assets and the credit side total liabilities, and we know that there should be a balance of debit and credit side. The difference on the credit side as a capital, so we can call it the balance between total assets and liabilities as known as capital at end. After completing the work to find the capital at the start and capital at end, Now we have to work on a statement of profit or loss. It is prepared under the single entry system in order to find out the amount of opening or closing capital of the business. Second, according to the net worth methods, profit or loss of the business is determined by making comparison between the capital of two dates of the period. Where do we start working on capital, statement of profit or loss? We should know the name of the business. And the second heading is the statement of profit or loss. Third, for the period ended, in which we have to mention in which era or in which financial period we are going to prepare the statement of profit or loss. The very first thing that we should know is capital at end. We always add drawing in the capital at end to find the adjusted capital at end, then minus or less capital at the start, and then further less additional investment. Then we find the unadjusted profit or loss during this computation. Then we less operating expenses or all those expenses that occurs during the financial period. And after deducting operating expenses from unadjusted profit and loss, we will find the profit or loss from the operation. Further, if we have some other incomes, so we will add back in the profit and loss from the operation, and then we finally found the net profit or loss. During the working on single entry system, we are going to prepare another statement which is known as a statement of affairs. And as per the definition, in the single entry system, the financial position is disclosed by the preparing a statement of affairs. And as per the statement of affairs format, it's similar as the balance sheet that we remember or that we learn in the first year. It should be represent the assets and the liabilities and should be equal on the both sides. Like if we have these assets like cash in hand, cash at bank, bank receivable, investment, closing stock, any prepaid account or any assets that we are depreciated, so we have to deduct from that assets account, or anything that is related to goodwill, it's always recorded in the asset side. When we are working on the liability side, so we have to know what are the cap amount of account payable, bill payables, or all type of payables should be recorded in the liability side. Even though we have to record a bank overdraft if we are getting extra money from the bank side, and further the outstanding expenses because it represents the same as payable. Then we have to record capital at end and then add net income that we are find through the help of statement of profit or loss. If we have net income, so we add in the capital, or if we have a loss, so we minus or we deduct or less from the capital side, then less drawing, or if there is a further income tax, we have to deduct from the amount or the balance that we after deducting a drawing that we have. It should be a same from the both side, so we can easily find that it's same as like the balance sheet works. And at end, if you have any question related to this chapter, feel free to ask on class WhatsApp group. Thanks for watching. Allah Hafiz.